Roundtable guest this week, we have Mike Flores, we have Brian Basting. We're going to talk about what's going on around the world. Wheat probably is a crop. Somebody told me that every month of the year there's somebody planting and somebody harvesting wheat somewhere in the world at this point in time. But our wheat crop isn't looking that good right now.
It's too dry out west, Al, and you start in the northern part of the hard red winter area, parts of South Dakota, Montana, Nebraska. We have some of the slowest emergence levels in recent years, just too dry. And while the crop has emerged further south in Kansas, Oklahoma, that crop is not in great shape either. It's only fair, so that crop is not off to a real good start.
Let's talk about what's going on around the world. Not Argentina, I'm thinking of Australia. Another country starts to nay. Their wheat crop hadn't as good as they thought it was going to be this
Everybody
year.
gets ratcheted down as the year progresses. You know, you're expecting a crop here and it ends up being down here all around the world. So wheat is becoming scarce, or not scarce, rarer, put it that way.
Okay.
Supplies are shrinking. And if you look at a wheat chart, it's been going sideways since July. And you had a leg up, then it's gone sideways, and it's holding that leg, meaning higher prices. What I think is eventually going to happen is it's going to break out again and form another leg to the upside, which would be a few dollars higher.
Earlier in the year, they were blaming corn. They say, well, the wheat is tied to corn and it's keeping up like this. But then they said Ukraine, I guess they're not going to actually limit sales, but they know they don't have enough to sell. So that's the whole situation.
Wherever you go, there's less wheat in the world than there used to be. So prices have to go up to ration that supply.
One way or the other, huh?
One way or the other.
What's holding corn sideways then?
I think demand for corn is as poor as we've seen in recent memory. Their idea is that the corn export number from the USDA will be lowered again on Friday in the report. Tremendous competition from Brazil. So we're looking at one of the weakest corn export programs probably since the 60s. If not the 60s, the early 70s, before the explosion in sales to Asia. So demand is not there for corn. Feed demand is backing off for corn. Cattle on feed numbers are coming down, so it's strictly looking at demand now. For corn is not there.
But won't exports pick up in corn as we get like December or something when Brazil's basically out of the market? So we may have a little lull right now in exports, but that's going to kick up again. So you get the temporary lags in certain categories of demand, but ultimately you have very little corn. So you can't push the price down, because if you do, then the demand comes in from exports or various sources. So you're not going to break corn. It's going to stay up here and probably go up.
Stay up and probably go up, but it seemed like the high prices we eventually got to did slow down demand in some areas. I know on the East Coast, a lot of poultry producers are importing corn from other countries in order to be able to solve their problem, and we're feeding some wheat and as opposed to corn in some areas.
Not as much anymore, because the price differential has gone the way. So.
How about soybeans? Soybeans is a different story. That demand for oil is going to be good. We already talked about that. China's going to continue buying beans and this sort of thing, but that price once again affected the demand, right?
Well, I think soybeans are getting ready for another leg up.
Oh, you think so?
I think there's going to be a few dollar move up over the next 90 days in soybeans. There's not very many beans either. Every category of grain, there isn't very much of it. So I think that I'm looking at another wave to the upside, which should measure at least $18.
Okay, I want to talk about what's causing prices to be like that. And of course, demand, we've talked about that, supply, demand sort of thing. But I got information that says that Chicago Board of Trade, or CME, the trade volume in October was about 7.5% lower than it was on a per month basis the month before. From year to date, the number of trade is about 10.7% lower. Now that means to me that there's not a lot of money in there, and with all this money going up and down, that's what really evolves the trade, and doesn't it? Volume?
Sure it does. Sure it does. But there's a couple of factors that came in, MF Global and PFG, which I happen to be involved in. You lose clients' trust of the marketplace, and I think that it was a certain amount of it, plus a lot of hedge funds which didn't do so well in the markets are no longer in business. So there was a couple of factors that came into play.
Less money out there. When there's less money, there's less trading. When there's less trading, less volume, and there's less opportunity for the prices to go up or move. Is that right?
Right.
I could see the fall drop off. For example, you gave October relative to September because of the summer drought, which encouraged some speculative trading. But I think when we get back into the winter months now in South America, it'll be something to keep an eye on.
Oh, we're all going to watch the election first. We'll be back with more U.S. Farm Report in just a moment.